I just want to get a sense of what you make of the sell-off yesterday. We continue to see this reaction, kind of a knee-jerk reaction when it comes to investors related to tariffs, even though on the campaign trail and even after the election, the president continued to say he would impose these tariffs.
Absolutely. This has been something that's been in the works. It's been part of the conversation since the campaign trail. But I think everyone was hoping that it would continue to get delayed, continue to be more of a negotiating tactic, and maybe we wouldn't actually see a lot of this go into effect. But we're moving forward, and it's really not unexpected to see that happen. The question will be how many more are coming and how long do they last, and really what kind of effect that will have on the economy.
Well, speaking of the economy, the Atlanta Fed came out with this GDP Now figure just a few days ago. They saw Q1 GDP down 1.5%. Their new number is 2.8%. Do you think that's factoring into some of the investor sentiment, the idea that we're seeing the slowdown? We're seeing a lot of investors go to the bond market about growth fears. But when we're talking about equity investors, do you think that numbers like these, again, preliminary forecast here, do you think they have a deep impact on sentiment and how investors are seeing the markets?
I do think it's affecting sentiment, and there are a lot of things factoring into those numbers that could be unique, really, to the first quarter, where we saw some harsh weather in January, the wildfires in Los Angeles, people bringing imports forward to kind of front run these tariffs that were potentially coming, that we're seeing today. So there are a lot of things that are bringing this expectation down for the first quarter that really could turn and make the second quarter look a lot better. But I do think that it's affecting sentiment, it's affecting consumers, and the news is really affecting concerns that maybe inflation will stick around, the economy's weakening, and we may see some pullback in spending kind of as a result of that.
Well, I think a lot of people would say there's kind of chaos in the markets right now. But if you believe that, you also often hear people say where there's chaos, there's opportunity. Where are you seeing opportunity? We're going to hit this later in the show, but a number of sectors going into correction, including tech, materials, energy, consumer discretionary, in addition to small caps. Do you see any opportunities in any of those sectors?
Volatility has picked up, no doubt, and we've gone from tech leading the market for basically 2 years to tech really being the laggard now. We've been in our client portfolios, we've kind of been rebalancing. We were taking profits in the areas that had shown strength and rebalancing into other parts of the market. So in effect, increasing our weights to value sectors, financials, industrials, materials, et cetera, and international. And just kind of diversifying. I mean, the key right now, there's so much uncertainty, so it's really hard to make any big bets in any one area. But we're staying invested. We still are optimistic on equities. We're not overweight risk right now, but we're in line with targets and have diversified portfolios.
All right, diversified. Is there one sector that you see the most opportunity in, or perhaps a buy the dip opportunity? That's been a big part of the market story over these last 2 years during the bull run.
I mean, technology certainly has pulled back. We still have full weightings there, so it's not something where we're necessarily adding to at this point. If we see a broader pullback, that may be an opportunity. Where we've been adding more has been on the value side and things that have continued to do okay in areas such as financials.